Hello, everyone. My name is Matthew Frailey, founder of Breakpoint Trades, and happy 2024 New Year. Founded Breakpoint Trades back in 2003, providing advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms like you see here for individual traders and professional institutions. Looking forward to a great 2024 for all of us. And again, remember, check out our KISS systems. They're amazing stuff. Nothing out there like it. But anyway, new year. Let's go ahead and get this video started. First of the year. This is our backend recorder for our standard web page format. I'm going to go ahead and get this recording started now. By the way, if you're just watching on YouTube, the benefit also on these standard web page newsletter formats are that we provide the live chart URLs to our stockcharts.com charts. And so you don't have to recreate them. You can actually just take the links from us and save them, bookmark them, whatever you want. Check them later on with updates versus just looking at a static image. So that's a big reason to become a subscriber. Of course, also to be notified about the KISS systems. Anyway, let's get this puppy started. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. First off, Happy New Year, everyone. It's 2024. This is the first newsletter of 2024. By the way, looks like I got a little typo here. I got to change that to 4. I'll do that once I finish this video. Anyway, again, I hope everyone had a wonderful New Year's, safe, seeing family and friends, etc. We had a New Year's party. I posted it on my Facebook and also on our trading community blog. And anyway, again, I hope everyone had a nice New Year's, and we're looking forward to a good 2024. Okay. And as far as this weekend newsletter here, again, it's coming out on Monday because of the holidays. Divided into 5 major sections. By the way, as far as the sectors, usually on the weekends we go over all the sectors. I'm not going to do that this evening. We already got enough charts to look at. And again, a lot of people are still in holiday mode. So we're going to go ahead and keep it simple. But again, these newsletters, we do a top-down fashion. We look at the major indexes, again, from a top-down fashion to the bigger monthly, weekly charts, all the way down to daily and intraday charts. We'll look at some custom indicators, a few sectors. We'll look at commodities, US dollar, precious metals, and some trade ideas. Okay. If you're new to this format, our newsletters tend to be anywhere from, well, the weekend ones around 40 to 50 minutes. The intra-week newsletters, videos around maybe 20 to 30 minutes at most. Okay. Again, guys, like I said, Happy New Year, good fortune and health to you and your families. I feel blessed for your patronage and support. The KISS systems had an amazing 2023, especially the last couple months. They caught most of the uptrend from the late October lows, and I hope you guys participated in those. We don't have a marketing budget really here. A lot of our members come from word of mouth, the family and friends, and we appreciate that. And honestly, the way these KISS systems are, you should show some of your friends or family, because I think it would benefit them greatly. Not just us, but it's really an amazing, easy format to follow. The systems take an entry. They're long only. They set an initial stop, and then they move that stop up over time. We call it smart trailing stop, in order to protect your profits, but also give you a nice exit plan so that you can avoid corrections and strong pullbacks in the market. It's kind of like life insurance for your portfolio. Really nothing out there like it. Again, while 2022 was a bear market, 2023 was a big year for the indexes, especially the NASDAQ big cap tech stocks. The NASDAQ triple Qs gained 55%. Think about that, 55% in 1 year. Okay. Now, if you contrast that with the other indexes, the S&P gained about 24%. It's very respectable, but it's still less than half of the NASDAQ. Shows you where the gains were concentrated last year. The Dow Jones gained 13.7%, and the Russell, which came back the last couple of months of the year, gained 16.8%. Again, the market had that typical seasonality weakness from late July into late October, and then it enjoyed that strong end of year rally and Santa Claus rally, which is typical. Okay, again, the trend is clearly strong and it's up. That said, we are upon a new year and we are looking for a pullback either right here, it's either begun or very soon. Okay, so if you got to think about it, guys, there's a lot of folks and traders who have massive gains last year, they did not want to take those profits in December because of tax concerns. They'd have to pay taxes. Well, that tax concern is now passed with a new year. And so, some of those traders and individuals who've been wanting to trim up their positions and take some profits, that they can now do that. And so I think that'll add to some selling pressure. I'm also seeing some divergences on various time frames, indicators. And again, the market's had almost a straight 2 month up move. It's due for a rest, a pullback. Okay. Now, what I favor is some sort of pullback and then maybe another rally attempt, maybe to a new high or a double top. Then we're looking at a larger pullback to at least retest that 4,600 area on the S&P. Remember, that was the previous big resistance area. I think over time that will be retested. Okay. Again, the nice thing about the KISS systems, like I said, they allow us to follow the trend with a protective stop, sort of like life insurance for your portfolio. So let's say the market doesn't, have a pullback like we're looking for. Let's say it wants to go up another month or two. Well, the KISS systems will ride that. Okay. The market decides to have a rug pull before then. Well, they'll get you out. Again, it's all about the Fed. The market is pricing in 7 rate cuts for 2024 with an even 10% chance for an 8th cut. To me, that's pie in the sky, just crazy to me. I don't see that happening. I think market's way too optimistic there. And let's be honest, if they have that many rate cuts, there's going to be other major problems, maybe recession, economic slowdowns. So really, you don't want to see 7 rate cuts, all right? And anyway, enough of that. Let's go ahead and start with the newsletter. So before we get into the charts, again, talk about the KISS systems here. So this image is directly taken from the KISS system tables. Like, in case you don't know, we follow 630 stocks and ETFs. You can see the baskets at the top. We have a basket where I put some of the major, followed stocks and ETFs in. Then we have the mega, the top 10 NASDAQ stocks, all the NASDAQ 100 stocks, all the S&P 500 stocks, over 100 ETFs here. I think we got about 120 ETFs, all the Dow Jones 30 stocks, and of course, your favorites that you should be setting up if you're a subscriber. You can't do that if you're not a subscriber. So, but on the basket, look at these awesome gains here. So Mara, which is a crypto stock, they closed out. It hit its smart trailing stop on Friday. Still managed to close up 112, 113% gain. So that was an amazing entry. And the you could see the other gains here. The S&P KISS system went long on November 3rd. It's up about 9.3%. AMD's up 30.9%. Coin, there's some of these other crypto ETFs up 100%. You can see the other various gains. Again, the KISS systems, like I said, they go long. You can follow them, set your stops, adjust them when there's new smart trailing stops generated, etc. Now, they're all not going to be winning trades, all right? But the losses are generally kept pretty small, and they can catch big winners. Next, image number 3. This is the favorites section. Again, you need to be a subscriber. If you're a subscriber, you're greatly missing out if you not set up your favorites. So go here, check mark that box, receive alerts about your favorites. We like you to check mark that instead of having it default checked because of the spam laws. You need to opt in, all right? But once you do that, you can see your favorites. Remember, you could set favorites by clicking on the star, which then is highlighted. And you can see some of these crazy gains here, especially on some of these leveraged ETFs. SOXL, BULZ, FNGU, etc. But every time there's a new change, one of your favorites takes a position or exits or has a new smart trailing stop, you'll get a nice clean email with the updates. So you can just follow along. It's very neat. Check it out. And we are going to, like I said, we're going to have a major update to the KISS systems hopefully this month. The high performance versions, and they'll come out at a premium, but even these standard versions are great, guys. Next. All right, moving back to the general market. So this index sector table shows you what transpired last Friday and for the week. Friday, the market indexes and most of the sectors were slightly down. Again, pretty small losses. The Russell was down the most, 1.6%. For the week, The indexes were slightly up except for the Russell. Market sectors more were up than down. There's 21 we follow here, but you know, fairly small gains. Currency wise, US dollar down about 0.2% for the week. Here's the cryptocurrencies, which had a good week, especially the stocks, but they pulled back pretty strongly on Friday, like Mara, Hive, Riot, etc. Bitcoin is still in a coil pattern, so we're watching that. Commodities, so the DBC, that's the index ETF, was down about 0.85%. Crude oil down 2.6%. Natural gas up 1%. Again, most of the commodities were down here, except for wheat and natural gas. Sugar, which I'm sure most of you don't trade. Precious metals. Gold was up 0.5%. Silver down 1.5% for the week. GDX, the stocks were down 1.74%. That area, again, the stocks are underperforming here short term. That area, especially if we have a pullback in the market, we may see some weakness here. Okay. And otherwise, they had a great move off the lows. Hopes that you caught those. And as far as the bonds, 10-year last week was down 0.9%, 20-year up 0.4%. So I am looking for a potential bounce in rates here and a pullback in the bonds. That may also correspond with a pullback in the market. Next, image number 5 shows you the economic news calendar. Tomorrow we have the S&P global U.S. Manufacturing PMI. So let's see how that comes in. Again, as you know, inflation, at least by the numbers they report, have been coming down. So people are going to be looking at that. You can see the rest of the stuff for the week. FOMC minutes on Wednesday is a big one. You have ISM manufacturing, ADP on Thursday, initial jobless claims, crude inventories, S&P U.S. services PMI as well on Thursday and Friday. Being the first Friday of the month, we have the non-farm job payroll reports, and of course ISM non-manufacturing. So those are big headlines for the week. Next, jumping into the indexes, let's look at how the year fared. Again, I already discussed this in the opening comments. So this chart is a yearly chart of the 5 major indexes and some of these other areas such as commodities and bonds. So each candlestick is 1 year. As you know, 2022 was a bear market. Last year came roaring back. Dow up 13.7%. S&P up almost, about just over 24%. NASDAQ up almost an amazing 55%. That's one hell of a move. Small caps up almost 17%. DBC commodity index down 6% for the year. And TLT bonds, remember, they've been absolutely punished the last couple of years. Since 2021, they finally bounced up 2.8%. Next, image number 7. This shows you a weekly chart of the major indexes with the Bollinger Bands. Again, as you know, we had that typical seasonality weakness from July into late October. We had those pullback consolidation patterns in the indexes, kind of like flag patterns on the weekly. We had the huge rally, broke out of those patterns, and we've rallied very strongly, making new all-time highs on the Dow and on the NASDAQ 100, etc. We're up again in nosebleed territory up at the upper Bollinger Bands. Smaller candles here. You can see the dojis here on the NASDAQ. That could maybe produce a little pullback here. Again, remember, guys, we may see some tax selling or delayed tax selling here in early January. Finally, chart number 8, here's the daily view with the major indexes. Again, just showing the same thing just on the daily. We're still holding the 9 EMA on these time frames. That's your first support. If that is lost, then the next target would be the 20-day moving average, essentially the middle Bollinger Bands. I know that's very simplistic, but it's a pretty good guide when you're uptrending above the 9 EMA on very strong trends. When you break the 9 EMA on a closing basis, not an intraday candle move below it, but a closing basis, you almost always test the 20. Okay, but you can see the vertical move up in the Dow there. Next, just taking a quick look at the Dow. Remember the Dow, we don't show it all that often. It's only 30 stocks. By the way, we show all the 30 components on the KISS systems. KISS systems have done extremely well on the Dow. You should check those out. But anyway, you can see again, The Dow's been really, super strong on that move up from the October lows. Just a straight moonshot up. But we now have some pronounced RSI divergences, smaller candle ranges. You can see momentum starting to wane. So we'll see if we can get a rest here sometime soon. You also have the very wide moving average ribbon. Next, moving on to the S&P 500, which is our proxy. So here's the weekly view of the S&P, up 0.3% for the week. Again, we still have that target of the all-time highs, which I think we're going to tag. So what we're either going to see, I think, is the market will push higher, tag that area, and then we finally get our pullback. Or we pull back here first, then rally up again and tag that area. Okay. Ultimately, though, I do believe we're eventually going to retest this 4,600 area. That was previous big support. Likely be tested and a rally off, or if you were to break that, that wouldn't be good. But either way, again, we either have a little pullback now, but if we have a pullback now, I do still think we're going to tag those highs eventually. They're just too close. It's kind of like two magnets that you put them too close together, they will snap together, and that's kind of how that is. All right. But we are looking for a pullback here sometime soon. Next. Chart number 11, moving on to some of the KISS systems. Here's the S&P KISS system for the S&P. Again, you can see how it went long back here in early, late October. And you can see all the smart trailing stops. Had a nice trade earlier in the year. Had a little whipsaw trade in late August, early September. Stopped out, which is fine. That's what the systems do. Current stop here is 46.13. By the way, DVT, I need to change that. I keep forgetting. Should be STS. DVT was the old acronym. We changed it to STS, Smart Trailing Stop. I think a lot more people understand that versus DVT. That represented dynamic variable trigger, which, really didn't mean much to people, and it's kind of redundant in a way. But anyway, that's one. This is one version. Let me show you another version. So here's another version of the daily. This one has a tighter stop at essentially 4,700. It's pretty tight here. This could easily be hit. So, you have to decide which one you use here. If you're using this one, then, this could be tagged and we go up again. If you want a wider stop, you could use the one above. Next. Chart number 13, here's a weekly view of the KISS systems, the S&P, Qs, IWM, and the Dow. They're obviously all long. And let me move this over a bit. But one thing, again, the weekly systems are going to have much wider smart trailing stops. Logical. You could see DeMark 9 here on the S&P weekly. That's notable. Okay. Doesn't mean we stop here, but that is an important thing. You can see the KISS system did really, even the weekly did very well in 2022, getting out in January or February, and got back in long nicely in early 2023. And you can see the other indexes. We also have the Mark 9 on the weekly Qs. We have the Mark 9 on the Dow. So a lot of things lining up there to be a little bit cautious about. Next. Chart number 14. Here's the 4 time frames we like to follow as well with some of our indicators. So here's the daily at the upper left. So again, like I said, we have some A's here. I had to refresh the chart here to update it. But so here's the image again. You can see all these little A's showing up on the daily S&P. That's amateur buying. It means low volume. Again, end of the year makes sense, but sometimes you get that before a pullback. We're still above the ATR, which is your big support. ATR support on 130 minute. Not a lot to say about these, quite honestly. The one thing to note, the resistance cycle here is potentially pointing to a wave 5 on the 78 minute, which we'll see if that ends up playing out or not. Next. Chart number 15, moving back to these standard charts. Here's the daily S&P. Again, you can see that correction from late July into late October. 5 waves down, strong move up. We took out the 4,600 highs, new all-time highs. Again, notice the RSI divergence now. We've had pretty much a straight up move. We're still holding the 9 EMA. If that's lost, then the next target would be the 20. I do think over time, like it says here, we will test the 4,600 area. That's big, big support. Okay. Next, chart number 16. Here's another view of the S&P. Shows you the same thing. Here, Steve pointed out the little time symmetry. That rally last year, October into December, was 42 bars, and quite incidentally, 42 bars here. Isn't that amazing symmetry? So essentially, from the same time in 2022, from October till now, and this year, October to now, 42 bars. And you can see then last year, or 2023, in the early, then we had a pullback. So kind of interesting, something to be aware of. Again, otherwise, we push higher here in the short term. Like I said, the magnet would be the all-time highs there, up here just over 4,800. Next, chart number 17. Here's the half-day chart, 195-minute. Again, shows you the same thing. We have a little potential wedge type of action here. We'll see if this produces a little pullback. Again, this is a big support area down here. That's obviously quite far away. I don't think it will just test that easily right now, but eventually over time, I think we will. The 60 stochastic, which is, a longer version over the 10 stochastic, you can see it's been embedded above 80%. That's something to monitor as well. Again, you can see the wedge here, little RSI divergence. Next, chart number 18, here's a 60-minute chart, nice clean chart. You can see the clean uptrend channel we've been in. One thing to note, guys, for symmetry, the largest pullback in this uptrend has been about 80 points. So once we get a pullback larger than 80 points, that should constitute a bearish symmetry break, and that'll effectively end this. I can have a confirmation to the end of this current uptrend. Then you'll form a lower high. So that's something to watch for when we have a larger than 80 point pullback. Next, chart number 19, here's a 30-minute chart. Late last week, we were showing a little wedge here, and that did play out on Friday for a quick pullback. Bounced off this 130 moving average. Next, chart number 20, here's another 30-minute chart. Again, very similar to the S&P 60. You can see this clean channel. Something to watch early this week. Do we break the channel or do we bounce up into it further? We'll see. Finally, chart number 21, here's a 10-minute view of the S&P. So in my newsletter last week, I talked about this consolidation pattern. I thought we'd break one more time to the upside, and we did on Thursday. So I talked about that on Wednesday. But then we broke down, bounced up on Friday, but stalling around that 61.8 fib area. Okay, so that's a logical area. Now we'll see what the market does early this week. Futures tonight are flat pretty much at the moment. Next, moving on to the NASDAQ, triple Qs. Here's the weekly. Again, briefly making a new all-time high. Again, you got a black candle doji. We're in nosebleed territory. Could be a logical area to pull back soon from. Chart number 23, here's a weekly version with this wave count, this nested 1, 2, 1, 2. And so if we do put in a little top here, if this is the correct count, this would be a wave 5 of 3. So that means a stronger pullback would be some sort of wave 4 of the, not the parentheses, but of the larger one. So something like this. So you'd be a wave 4 and then go up again. Again, this is a weekly chart. If that's the case, it may take a couple months for that to play out. Next, chart number 24, here's the daily chart of the Qs. Again, just up, up, and away. Though this one has a pretty good RSI divergence now. Momentum's waning. You can see the MACD is close to crossing its signal line. Losing the 9 EMA, I think we get a quick pullback to that 20-day moving average. And maybe over time to this 50-day. Over time. Next, chart number 25, here's the KISS system for the Qs. All right, sorry about that, guys. I had to refresh the chart here. So here's the daily KISS system for the Qs. You could see an amazing long entry there in late October. All the smart trailing stops. It set its initial smart trailing stop at the low there at 342, moved it up 3, 4, 5, 6, 7, 8 times. It's currently at 394.60. So that's a great example of the KISS system going long, pretty good entry, and protecting those profits along the way. Again, kind of like life insurance for your portfolios and trades. I know when the market has been running like crazy, people don't worry about risk, but there's always risk. And the KISS systems, what's nice is, they'll participate in the trend, but they give you an exit. Next. Chapter 26, here's the 4 time frames we like to follow. Here's the daily up here. One thing to note on the daily Qs, again, we had a DeMarca 9 at the lows, then a 13, and then a 9. So a 9, 13, 9 is usually a pretty good signal. Now, again, we pushed a little bit higher, but you could see the 3 A's there, amateur buying. Again, first support would be that ATR, same on the half-day chart. But we'll see, guys, but something to be aware of. Chart 27, here's Triple Q's half-day chart. Again, similar looking view to the daily there. You can see the little divergence here on the RSI at the moment. Chart 28, here's the Russell 2000. This is the monthly chart, which was up 12.1% for December. Had a great November. And you can see this area around the 160 was previous resistance, 2018, 2020. Then it became support in 2022 multiple times, and 2023. It was a logical area to rally off of. Okay, small caps really played catch up last year. The last couple months. Remember, most of the year, the NASDAQ triple Qs, basically 7 or 10 stocks led the market, but we had broader market participation the last couple months. You could also see the weekly MACD trying to cross up from an oversold condition. Chart 29, here's the daily chart. Again, as you know, price rallied off that demand zone in October in a big way. We had an inverse head and shoulder pattern that we pointed out, obviously played out massively. We got very overbought last week. Remember, the Russell pulled back the most, pulled back about 1.6% for the week. You can see the RSI divergences up here pulling back. By the way, this broken trend line is now support if we lose that 9 EMA. Finally, chart 30, here's IWM's 60-minute chart. We were also showing this rising wedge late last week, and that played out, or is playing out, as you can see with the pullback. By the way, there's an open gap back here that's unfilled in mid-December. That could be a target over time. All right, guys, that does it for the indexes. Let's go ahead and move on. Look at some of these indicators. So first off, here's the breadth thrust indicator. Again, if you don't know what that is, you should look it up. It's Martin Zweig breadth thrust. We had a confirmed breadth thrust signal in basically early November when we had that first week rally up. This indicator went from oversold to overbought. It needs to do it within 9 days. I think it did it within 4 or 5 days. So it confirmed, and the market, that was a good signal. The market had a massive rally. It's now pulling back though. You see that, and the NYAA hasn't really pulled back much, so that could be a little divergence warning short term. Next, chart 32, here's the VIX. So the VIX has been mostly going sideways since mid-December. The Bollinger Bands are kind of constricted here, so just something to watch if this were to build a base here and try to bounce. Next, chart 33, here's a 2-hour view. So back in October, we drew this rising wedge, which played out. That also led to the market rally. We had a channel. We broke out of the channel. We're pulling back. But I'm watching this, guys, because if we were to pull back and retest this channel line, that could be a logical area for the VIX to bounce off of, and thus a logical area for the market to pull back from. Finally, chart 34, here's a 15-minute chart, just showing how the VIX has been finding support in this demand zone down here for now. Next, chart 35, here's the percentage of stocks in the S&P 500 that are above their 20-day moving average. And again, you can see, it's been in nosebleed territory for about a month and a half, but we recently have some divergence here with respect to the S&P. So just something to be aware of. Again, it's not down here in very oversold territory where it's low risk longs. It is up here in nosebleed territory with some divergences. Next, chart 36. Here's some of these custom indicators that we follow. I thought I put some more in here, but I don't see them. So here's one of them. There's also the NYSI indicator, which is a great one. But these are great little system type charts. You can see the nice trade signals on this one. Again, we have a lot of these, from this one to the NYSI 9 EMA system to others. And that's another reason why our standard format newsletters are good over just the videos, because we provide you the live chart URLs. Next. Moving on to bonds, here's chart 37, high yield corporate. Pulling back the last couple days of the year, right at the 9 EMA. Again, if we lose that, then the 20 would be your next target. Moving average is pretty wide here. Now, the market tends to follow high yield corporate. So where high yield corporate goes, the market does. That's why you always want to follow it. Chart 38, here's the S&P versus the high yield corporate. And again, like I said, you can see the two tend to move lockstep with one each other. Divergences show up once in a while, which are important, just like you had a negative divergence in July, where S&P made a higher high yield corporate did not, and that led to the market correction. Then we had the opposite in late October, lower low in the S&P, higher low on the high yield corporate, and that led to the big rally. Now, very, very short term, you can see they look very similar. The very short term, I'd say over the last 1 or 2 days, high yield corporate's been a little weaker than the S&P. Next, let's move to bonds and rates. So a few months ago, I postulated a major bottom in the TLT 20-year bonds. It had fallen to a demand zone. We had 5 clear waves to the downside. We had MACD divergence, RSI divergence. Again, you can see the clear 5 waves on the pattern, on the moving average. Everything was set up here for a rally. And look at that nice rally. That is one of the reasons why the market rallied so much. But we called this, again, a great call a couple months ago. Chart 40, here's another version of this. Shows you the same thing. But you can see this is what I drew a couple months ago. I drew an initial rally up as a wave A, which I think we're in. Eventually, this is going to pull back in a wave B. That'll likely correspond with a bigger market pullback, right? But then, again, this should theoretically go up in an ABC, so then I'd be looking for another move up. And something like this. Again, because I think TLT is in a secular bear market, I'm looking for this to form a lower high. But again, it could take most of the year to complete, guys. So just pointing that out, but their chart's been playing out perfectly. Next, chart 41, here's the 10-year treasury yield on the daily. Again, it's had a hell of a pullback from that 5% area where I called the top, but it is oversold here. We have some MACDs trying to cross up. This could be set up to bounce soon. Be aware that would also be a good reason for the general market to pull back. Chart 42, here's a 2-hour view of the 10-year treasury yield. Again, you can see it's in this channel, downtrend channel. There is some divergence here. There was some divergence at the lows where we've bounced from, so something to watch for. Next, chart 43, here's TLT 20-year bonds, the daily. Again, quite the opposite of the 10-year. You know, it broke from this parabolic downtrend, had a hell of a rally. It's now extended. Some divergences up here on the RSI and MACD. Now, if I'm looking for a pullback or I'm looking for a bounce in the TLT, one way to play it would be TBT. Or I'm looking for a bounce in rates soon. So one way to play that would be TBT. That's the double inverse ETF for the 20-year treasury yield. You have a somewhat of a divergence here on the MACD and RSI, testing the 9 EMA. So that's one instrument to watch, or you could trade this or as a hedge. Next, chart 45. Here's the yield curve. I haven't shown this for a while. It's still negative. So despite the end of year rally and all that, it's still below, it's still negative here. So this is something to watch this year, see if it goes back positive. Again, sometimes when these yield curves are inverted and they go back positive, that's when you have your recessions. But just pointed out, it's still inverted. Next, chart 46. Here's this chart shows you some of the major sectors. Again, we follow 21 market sectors. I'm not going to cover all the individual sectors like I normally do on a weekend newsletter. We have enough charts. Next, moving on to commodities, chart 47, DBC, that's the index. You can see the breakdown here. Breaking down from a little little flag late last week. As you know, it rallied off this demand zone in early December. Moving average ribbon is still bearishly stacked. Next, chart 48, here's crude oil. Again, this has been we've called this pretty well. We called that little 5-wave high back in September. And a little head and shoulder pattern, we called that. And we also called this demand zone where price rallied off of for a couple weeks, pulling back now. Now that last rally, 8.5 points, it's pretty similar to the previous one. So I don't know if I'd count that as a symmetry break, but just something to be aware of. Pulling back now. You could also count 5 waves down here. Next, chart 49, natural gas. So far, just kind of chopping around after that low in December. Next, chart 50, here's copper. This is the daily chart. Again, beautiful rally off that long-term support a couple times last year. Right now, we got a little potential wedge to monitor. Chart 51, here's DBA, the agriculture ETF. As you know, it's been coiling. I've been showing that. Very weak on Friday. This looks vulnerable to a breakdown. You do have the 200-day moving average below there, but let's see what this does. Chart 52, here's wheat. We've been showing this as a potential coil. Steve has a cup and handle. I would just follow the coil pattern. Energy is building. And again, a way to play it would be the ETF, WEAT. Similar pattern, obviously. Next, moving on to cryptocurrencies, chart 54. Here's Bitcoin. As you know, it's been coiling. And you can see it's actually trying to break out of this coil. It's been up over the weekend, starting to try to break out of this. So maybe we'll see some recovery in those crypto stocks, which sold off pretty strongly on Friday. Next, chart 55, here's Bido. That's roughly follows Bitcoin. It's one of the leveraged ETFs. Still in a kind of a coil pattern as well. So this is one, if Bitcoin stays up, this should be up on Monday. Next, chart 56, here's Mara. Like I said, the crypto stocks had one hell of a run. The KISS system caught along in Mara, I think in late November, something like that. Closed on 112% gain. The smart trailing stop was hit on Friday, obviously. Hell of a pullback there. Again, when things go parabolic like this, guys, make sure to protect those profits. That's a good reason for the KISS systems. That's what they do. But big pullback here. Again, if crypto bounces here, we'll probably see at least an oversold bounce here. But this doesn't look like it's going to just recover to a new high easily. After a parabolic move and a big candle like this, maybe you get a bounce up, lower high, and then down again would be my guess to tag this 20-day moving average. Okay, so be careful if you think this is just going to go back to the highs. The odds don't favor that right now. It favors more of an ABC down. Chart 57, here's Wolf, another one of our long ideas. Again, was a great trade out of this diamond, but hopefully raise stops, take some profits because it sold off on Friday quite strongly. Next, chart 58, here's US dollar. Again, US dollar has been stair-stepping down, as you know. There is a demand zone down here. We'll see if we get to there or not. There isn't any MACD divergence. Next, chart 59, here's the monthly chart. Again, in this kind of this uptrend channel that we made back in 2022 with that wave 5, it's been playing out. Chart 60, Japanese yen. This is a monthly chart. It goes back to 1998 during that Asian currency crisis. You can see it's been finding some support around there. MACD divergence there. And chart 61, FXY, that's the Japanese yen. I pointed out that double bottom long back in November, and it's moved up nicely since. Next, moving on to precious metals, chart 62, here's gold. So gold we identified as an ABC 3-wave pullback back in October. And that was a nice long. After that, it rallied up, 300 points roughly, 350 points. But broke the channel, pulled back, higher low. But, that move in late November, early December up to 2150, that represented a little blow off short term. So we pulled back, we've rallied. But what I wonder is, Does this need more of a consolidation now, like an ABC? We'll see. Ultimately, I am longer term bullish on gold, but it may need some work here. Again, if you went long back here in October or November, you do have plenty of room to give it if you want to. So you just have to decide yourself on that. And let's go ahead and move on. Chart 63, here's another chart of gold. This one has the GDX GLD ratio. Again, it's best when the stocks are leading. Very short term, they're leading down. Again, the hard to say what the wave count is. The bullish view would be a 1 2 1 2. If it's that, then price cannot go back below this 1935 low because that would represent an overlap. Okay, as you know, you can't overlap wave 2, right? Again, what I don't know is this an ABC? Do we get a move down in C down to here, or do we have some other pattern? We'll see. We'll likely get our answer early this week. Next, chart 64. Here's gold on the weekly. Again, as you know, when the gold had that big spike up to 2150, that did provide a little blow off, unfortunately. But I do think still over time it will break out of this pattern strongly and go well into the 2000s this year. Chart 65, there's a weekly version, same chart. This one also has the GDX GLD ratio to monitor. Chart 66, here's the monthly chart again. This would be the bullish count where we're going to eventually go up in a wave 3. New all-time highs, but again, most likely this will have this answered early this year. Chart 67, silver, still in the same overall pattern. Again, was a nice long off these uptrend lines, pulling back a little bit late last week from that tight coil, tagging the 20-day, 200-day, 50-day moving averages. Chart 68, there's the weekly. Again, this is your main pattern, this kind of coil-like pattern. And the final pattern, chart 69, here's the weekly version. This weekly chart, the monthly chart. This monthly chart, you have a big 4-year coil. You know how coils work, energy builds. And usually when you break from a coil, you have a powerful move. So if this eventually breaks out of here, this could send silver way up into the 30s, 40s, maybe test the 50 high. But it's something I'll be watching. But again, it's still in the pattern. Next, chart 70. Here's the weekly view of the Qs. And you can see the Qs, again, down 1.74% last week. Gold stocks, gold mining stocks. Weekly pattern, the bigger picture, it's also developing into a big coil, kind of similar to the silver, but big coil forming here. Logically, price pulling back a little bit near that coil trend line. Chart 71, here's the daily. Again, we had that sort of inverse head and shoulder pattern, higher low formed in November. Again, if you went long back in this time frame or October, you're in pretty good shape here, but realize this may need to consolidate a bit depending on what the markets do. Pulling back here a little bit. There is an unfilled gap here. That could also be a magnet here short term. Chart 72, here's a 2-hour view. Again, you can see some of these gaps here. Here's an open gap from mid-December. Next. Chart 73, here's the BPGDM. That's the bullish percent gold miners index. Again, these bullish percent charts go from either 0 to 100%. Rarely do they get there. Again, it was an overbought territory back there in May, which gave a sell signal. It was a good sell signal. We had a couple buy signals there in September and October. The one in October was good. And but right now what we got here is the BPGDM is basically in the mid-range. It's the 53.5%. But notice it's been flat for a month. It cannot stay this way. And you can see it's rare for it to be flat that long. So a move's coming here, guys. It's either going to quickly pop to the upside or to the downside. I know you might say, well, all right, well, how does that help me? I'm just saying energy's building here for a break because it can't stay like this. Okay. Even if we pull back, I do think it'll form another higher low, guys. Finally, again, I didn't add any new trade ideas here, guys. I just cover up some recent ones. We've had some awesome trades here lately. So here's Massey. This is a long idea of ours back in early November. First target was $100, and you could have just simply trailed your stops up maybe you were finally stopped out last week. I said trail the stop just below the 9 EMA. You could also see where the stop would be on the KISS system. Wonder if we have that one here. No, we don't have this one in the KISS tables. But anyway, you could have theoretically been stopped out or you're still in. But great trade. Driver 675, here's Nerd Wallet. We had this as a tight coil back in November. Hell of a percentage move. Again, hope you took some profits. It's had a hell of a move. Driver 76, FSR, Fisker. This is one that was very oversold. I talked about the capitulation volume. Finally breaking up a little bit on Friday. I own a little bit of it. I know fundamentally this one sucks. Be aware of that. This is only a trade, guys. It's not to put a ring on it and marry it. Next. Driver 77, SPXU. That's the triple inverse ETF for the S&P. I've been showing this late last week. The little doji I talked about on Thursday. And we did get a pop on Friday. If you're long this, a tight stop could go right there at the 848 low. Okay. Next. Driver 78, there's the 2-hour view. You can see that little tiny wedge. So again, if you triggered here, just have a stop in place. Okay. Driver 79, GPS. This was one from last week. It never triggered. This could go either way. A short or a long if it were to break up. It could be a short if it breaks down. Driver 80, HE, Hawaiian Electric. Still with this long base. It never triggered, so it's also one that's still valid. Driver 81, AMPX, was an inverse head and shoulder pattern early in the week that played out nicely. Driver 82, Peloton. I had it as a long, but it's now looking more like a potential short. Again, I didn't look for any new ideas, guys. I may look later tonight, post them on the trading community. And guys, that'll do it. Let me do a quick check on futures here. So, waiting for this to pull up. ES futures are down 1 point. So again, not much movement here. Things are flat. Again, Bitcoin's up nicely. We'll see what happens tomorrow. Again, happy 2024, everyone. Thank you for all your support, and let's make it a great year. Take care.